Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, April 16th, 2019. Well, folks, the first thing we have to talk about is institutional distribution, and really today we're seeing it just as much as we saw the previous days, maybe even more. Take a look at just the previous days. So this is going back to last Thursday. Here the markets opened decently higher, and then the institutions took advantage of the early portion of the day to sell, and then the market went to sleep as once the volume gets too light, the institutions have to basically go back and not sell anymore because the size that they're trying to sell will crash the market if it's too thin, if the markets are too thin, and they don't want to do that. They don't want to scare the little guy away from buying right now. And again, that's very clearly evident as of last Friday. Here, markets open up, institutions sell early in the day. Remember, early in the day, that's when there's more volume. As the day goes on, volume dries out. So once the volume gets too thin, they step back, they stop selling. What does the market do? It floats back up. Yesterday, same thing, opens higher, institutional selling, a little bit of a bounce retrace, and then the volume gets shut off, or the volume becomes too light for the institutions to sell, and we float back up. Today is almost even more peculiar because this is where the shadiness of Wall Street comes into play. You had BlackRock CEO Larry Fink, or whatever his name is, coming on and talking about the market and how bullish he is and how it's going to potentially melt up. And in my opinion, he's probably having his guys sell into the volume that he creates to the upside. And you can see it right here. Markets gap up on those comments. A lot of people will tell you it was UNH earnings. BS, because take a look at UNH now. It's crashing to the downside. I mean, look at this drop. It opened higher, and so obviously the markets weren't holding up on that. But again, you get positive comments from these well-respected institutional players, and small investors buy, right? And so it opens higher. They sell into it. And then notice right here is basically the low until recently. They stop selling. The volume's super, super light. Markets start to float. We come down a little bit now again. There's no institutions really selling much at this point anymore. Markets are likely to float up into the end of the day. So again, case in point, my point here is be careful of what you hear out there, folks. You had not just Fink from BlackRock talking about this, folks. I want to make this clear. I mean, there were other big institutional players that came out and were like, "Oh, this market could go higher." And if you tune into like Fast Money, they have guys on there. Market could go much, much higher. Upside 3,500 on the S&P. Well, guess what? In my opinion, smart money, and some of these guys are smart money, and it's again shady on their part. They're selling into the volume that they're creating on the buy side. So they're getting small investors to get more bullish, to bring money back into the market at these highs, just about all-time highs on the market. And then again, you see it clearly. I mean, folks, when there's a lot of volume in the morning, I mean, this is our heaviest. You can see it right here. Heavier volume, heavier volume. Look at how it dies out the rest of the day. So you can clearly see this. So trust me, it's not mom and pops that are creating a fall during the heaviest period of the day, right? I mean, let's use common sense here. So ultimately, it's bigger money selling, bigger money selling, bigger money selling. And then they shut off the spigot of the sell side action once volume gets too thin because, again, when you got to unload $50 billion, you can't do it when there's no volume out there. You're not going to spend, all single day unloading 100 share lots or 500 share lots, right? I mean, you just don't do that. To get to, a million shares doing 500 at a time is going to take you forever. So you do it in the morning when the volume is thick enough where you can do, 5,000 share block sells at least or something like that. And then you basically shut it off later in the day. And that's what we're seeing. And in fact, I'm actually surprised the market's continued and didn't get a float up so far, but now it looks like it's starting in on this market. Okay, so that's that, folks. I want you guys to just be understanding of that, be realistic about what's going on. Now let's take a look at Netflix. So Netflix earnings after the bell today. The stock broke down here, but look, they're trying to save it going into earnings. Let's watch to see where it closes here because this is oftentimes what we call a retrace to the scene of the crime on a breakdown, and I want to see what earnings are because the more it rallies, the more I get bearish on earnings. Now, if we were at the lows from yesterday going into earnings, I'd actually be slightly bullish, thinking it would bounce. But now a big bounce of $15 and change has come into the stock. It makes me more bearish. We're, again, retracing to the scene of the crime of the breakdown here. I'm very curious to see what happens here, folks. Now, the head of the CEO of Netflix is going to try to frame things in a positive light. I mean, he's always done this in the past. He's always framed things well. The question is, does the market see through it? I think it's inevitable that, it's impossible for even though Netflix was defended by analysts today, it even got an upgrade today, which is one of the reasons why it's surging back. People are thinking Deutsche Bank, by the way. Deutsche Bank's one of the worst banks out there if you look at the financial crisis and even post-financial crisis about the mess that they've made. But their analyst upgraded this stock and was like super bullish. I don't know if it's a contrarian indicator because they're not exactly the, if it's JP Morgan, I'd be a little bit more intrigued and say, okay, JPM's well respected, or Goldman. I'm not sure what to make of Deutsche Bank here, upgrading them. But in any case, bottom line is the stock's obviously having a big short squeeze today going into earnings. People are anticipating positives. That actually makes me a little bit more negative as it's already factoring in quite a bit of upside here. And again, let's see where this thing closes. If it closes right on this line here or below, that's just a simple retrace to the scene of the crime, and it's bearish. If it closes above this line, then there is a small chance that it could go higher on earnings. Again, I think because of the upside move today of 4.5%, it's taking some of that upside away in case it does want to go higher. You might only get a little bit more upside off of earnings, maybe another 10 or 15 bucks, but we'll see. I actually am short. I'm short here. I think that even if it goes up on earnings, there's no way that the competition from Disney, from Amazon Prime, from Apple, from Hulu, from CBS Plus, from HBO Go. I mean, these are all. I mean, think about it. If you add up, everyone's going to have HBO because of Games of Thrones. Well, not everyone, but most people. So that's $15 right there a month. Then Netflix is another 15. Then Disney was going to be, I think, $7 or $8 there. Then CBS All Access is another like $10 or whatever it is. I mean, it starts to add up. And as more of these players, and by the way, I'm not mentioning a bunch of them. I mean, Amazon Prime. I mean, granted, I feel like Prime people are more putting the money towards getting 2-day shipping and so forth. But I mean, it does that's more money that you're spending there as well. But in any case, I think it certainly is important to recognize that maybe it won't show up in this current quarter because Disney. Remember, the report for today is from last quarter, and Disney didn't launch their service until recently, right? Or they're launching it now as we speak, essentially. So I think it would, even if they spin it well, you have to think that there's going to be some cannibalization. There's going to be a point where growth should slow because some people are going to say, okay, I got $25 to spend. I'm going to do Disney because I got kids, and I'm going to do Amazon Prime because of this. And that's, they're going to say, okay, well, I guess I'll pass on Netflix for now. So it won't have, maybe there'll still be a lot of people that are joining Netflix, but it's going to have an effect on that, in my opinion, at least slow the growth rate. I don't think they'll stop growing. I mean, it's obviously Netflix, but it probably slows growth, which ultimately will drop the PE ratio that Netflix is trading at. So, in any case, we'll see what it is. I mean, it's going to be interesting. I bid you farewell. We'll see what happens on earnings. Have a great one, guys. Take care.